Welcome to Conversations. I'm Muqtadar Khan, and today I want to talk to you about a very surprising bit of news that has come out. More than surprising, it's truly shocking and truly unexpected. At least I did not expect that to happen. The news, as all of you have already probably heard, is that United Arab Emirates (UAE) has announced that it will be leaving OPEC by 1st of March, 1st of May, and today is 28th. So in 3 days, OPEC will UAE would have left OPEC after nearly 50, 60 years as member of OPEC. As you know, OPEC is an organization of oil producing and exporting countries. Some people call it a cartel. They have, in many ways, led by Saudi Arabia, have controlled the price of oil globally for decades. And so, by controlling the supply of oil, they have managed to control. So, on many occasions, in fact, Saudi Arabia has actually been very helpful in stabilizing oil markets when other countries, sometimes Algeria or Iran, have tried to manipulate the oil market. Saudi Arabia simply either opens the tap wider or shuts it down in order to control supply, in order to control the price. And on many occasions, Saudi Arabia has done this to essentially protect Western economies, especially the United States, when the US was dependent on Middle Eastern oil. But it is very interesting as to why UAE has left. There are clearly two potential reasons. Either this is a kind of rebellion against the Gulf hegemony of Saudi Arabia, or Saudi Arabia's regional hegemony, Saudi Arabia's domination even in oil, in OPEC, and Saudi Arabia's control of the oil prices. To a great extent, Saudi Arabia has determined what the oil price will be, and it is often determined by Saudi Arabia's needs other than the US. Either it is about Saudi Arabia's economic needs or United States geopolitical necessities. Uh, but but now the question really is, why is UAE doing this? This weakens OPEC at a time when there is war taking place. It means that the OPEC's capacity to control the price of oil, to raise it or reduce it, is diminished because now UAE is free. It's a way of saying that United Arab Emirates is practicing its strategic autonomy when it comes to oil production and oil distribution. So UAE, I think, has been hit really far harder by Iran than we are able to estimate, because some of his decisions seem to be panicky. So a few days ago, we got the news that UAE had requested the United States to provide a currency swap. Now, at the moment, official records show that UAE has about $250 billion in reserves for an economy that is the size of $550 billion. So its dollar reserves are roughly 50% of its GDP. So that's pretty good. So why is UAE then in need of currency swap? What is currency swap? Currency swap essentially means that uh, if UAE needs dollars, then it can take those dollars straight from the United States, and if they need to make payments, if they need to buy something or whatever, if they need 100 billion, 200 billion dollars, they will get it straight away from the US federal bank. It's an agreement between federal banks, and so the UAE central bank can take that money and give the US dirham. So it's not a borrowing, there's no loan transaction, it's just swapping. You say, okay, I need $100 billion. Here is 33 billion or 330 billion dirhams, because the dirham is pegged against the dollar. I think one is to 3.3 or 3.6. But later on, when UAE gets dollars, it can then go back and exchange that. So it's like saying you have a credit line. So whenever you need dollars, you can borrow that from the United States or take them from the United States. Why do countries need these? Countries need them because if they expect either that there will be capital flight, so I expect that UAE is expecting a lot of people to withdraw their funds and investments from UAE, and they will have to pay them in dollars, and they don't want to default on those things. UAE also pressured Pakistan to return the $3.5 billion that they had extended to Pakistan, and maybe that is part of the financial crisis that they are expecting. So one is that a hypothesis that UAE finds itself in a financial crisis, and in order to address that crisis, it is seeking dollars from the US. The other alternative is very much a geopolitical explanation, and the spokesperson for UAE who announced this was saying this is not a political decision. This is a financial nationalist decision. This is in the interest of UAE. So what happens is if you're a member of OPEC, OPEC decides the quota of how much oil you can produce. And of course, OPEC also sets the price. So if you want to sell more on the market, you can't do that. So let us say that the oil price is $100 and you are allowed to sell only $3 million or $3 billion, 3 billion barrels a day, whatever. But you want to sell more and you're willing to sell it at a lesser price. You can't do that. OPEC will not allow you to do that. So in many ways, the extent to which your oil trade goes is controlled by OPEC and indirectly by Saudi Arabia. So in many ways, people are saying this is a rebellion against Saudi hegemony, Saudi control of OPEC, Saudi control of oil prices, because now UAE will be able to exercise strategic autonomy and it will decide how much. UAE is allowed about 3.5 to 4 million barrels a day, whatever OPEC allows it. It has a higher capacity. So right now it's in need of money. It can actually produce more oil and sell more oil on the market. And that is what they intend to do. There are people who feel that this is probably something that the United States may have suggested to UAE and say, okay, we'll help you out, but we don't like OPEC, so why don't you leave OPEC? It's a very big decision for UAE because it is slowly breaking away from those safety nets that it was part of for decades. And increasingly, it is betting on its relationship with Israel and the United States and turning its back on old friends like Saudi Arabia and other regional countries like Pakistan, with whom they had very good relations for a long time. So it is very interesting. What you see is that there is a fundamental shift in UAE's grand strategy, and they seem to be moving away into an entirely different terrain, and we will see how successful this is. I want to share some data with you before I call it a day. So this is an infographic that I prepared. And what this infographic does is there are 3 columns that you can see. And in these 3 columns, what you're going to see in these 3 columns is that the first column basically is how much oil do oil producing countries produce. So what you're seeing is how much oil does OPEC countries produce. And you can see that OPEC produces about 36 to 40% of the global oil. So these are slightly lower predictions that I have taken, conservative ones. Saudi Arabia produces about 12% of the global oil, Iraq about 5.1%, United Arab Emirates anywhere between 3.5 to 4.5% of the global oil production. It is the 3rd biggest oil producer of OPEC. Iran also produces 5.1, Libya also around that, but those figures are not fully confirmed. But nevertheless, you can see that the OPEC countries produce about 40%, 36 to 40% of the global oil, of which about 10% is produced by United Arab Emirates, 10% of OPEC. Now, if you look at OPEC plus countries, then you have Russia, which produces roughly the same amount as Saudi Arabia. And then you have Kazakhstan, Mexico, Oman, and Bahrain, and South Sudan. These are all OPEC plus countries. And they also produce significant amount of oil, including Azerbaijan, Malaysia, Brunei, etc. And then you have major non-OPEC countries like the United States, which is the world's biggest producer of oil at 16%. And then you have Canada, which is probably the fifth after Russia, Saudi Arabia. Well, it's fourth. It is bigger than Iraq. And then China also seems to have a pretty good. It produces more than UAE, definitely. So these are the these are the three types of oil producing countries. So UAE is now out of OPEC and out of OPEC plus, and it is going to be now part of the third column. What does that mean? Well, it means that it is going to be free of Saudi and OPEC's influence, and it can now decide whatever amount of oil it wants to sell. Fortunately, at the most, it's going to bring in a difference of about 0.5% or less than that of the entire global oil market. So it's not going to have too much of an impact on the oil prices. But let's say if it doubles, well, it can't, but let's say theoretically it doubles its oil production, then yes, by increasing oil in the market, it will bring the price of oil down, which is something that Saudi Arabia doesn't like. Some of the oil producing countries are in debt, like Saudi Arabia and Bahrain are not in very healthy financial situation, and so they need the price of oil to remain above 80, preferably. It was at 65 before the war started. So that's an interesting development. I just want to also compare UAE with Saudi Arabia on some criteria, so you get a macro comparison. So Saudi Arabia is, in terms of population, nearly 3.5 times bigger than UAE. UAE's population is 10 million, of which 3.5 million are Indians. Anyway, and Saudi population is about 36, 37 million. Saudi Arabia's GDP per capita is about 30,000, whereas UAE is a much richer country with $55,000 per capita. So, to give you a rough idea, UAE is 20 times richer than India and 1.5 times richer than Saudi Arabia, a little more than 1.5 times. The oil production of Saudi Arabia is 9 to 10 million barrels per day, and which is again 3 times that of UAE, which is 3 to 3.5 million barrels per day. Some places they say 4 million barrels. Their capacity is 5 million barrels. So they will increase their, I guess, oil production by 30%. The oil revenues of Saudi Arabia are anywhere between 250 to 300 billion dollars a year, which is obviously varies because of the variation in oil prices. Saudi Arabia's total GDP is about $1 trillion. UAE is half of Saudi economy at $500 billion, and UAE's oil revenues are about 120. 890 to 120, roughly again 1/3 of Saudi Arabia's. But if you look at it, Saudi Arabia's share of GDP is about 45%, whereas for UAE is 30%, which means UAE's economy is more diversified than the economy of GDP. This is partly because of Dubai. Dubai has no oil, but it has tourism and it is a business center, an investment center, etc. There's real estate, and it's like a shopping place. People come there just to shop. So they have successfully diversified compared to Saudi Arabia, which has only the Hajj and oil markets. So it is less diversified, which means Saudi Arabia depends more on the price of oil for its economic development and growth than UAE, which is interesting. So oil share of export for Saudi Arabia is 70 to 75%, whereas for UAE is 30 to 35%. This is where you see that Saudi Arabia is going to be hurt by UAE's decision to withdraw from OPEC if it impacts the pricing of oil. So if oil prices go down because UAE has left OPEC and started producing more than its official quota, then I think Saudi Arabia is going to be hurt in significantly, because like as I showed you that 70 to 75% of Saudi exports are just oil, and a large share of the GDP, what 50%, 45% comes from oil. So we are seeing some significant developments. People who think that this attack on Iran was just the US and Israel trying to make Israel safe, or rather establish Israeli hegemony in the Middle East, is going to have far, far serious ramifications. Nobody could have predicted last month or even last week that UAE would be leaving OPEC and forcing Saudi Arabia to become so vulnerable. In many ways, you can say that this war is dividing the Gulf countries. One chatter among policy elite is as to how Iran's attack on all the Gulf countries, all the 6 members of GCC, has sort of united them and given them a shared purpose. But this doesn't look unity. This clearly is a rivalry and a disagreement between the 2 biggest economies of GCC, which is UAE and Saudi Arabia. And so it appears as if that the internal divisions of in GCC are not impacted by external threats. Usually when countries face external threats, there is an internal unity, and you don't seem to see that. And I feel that this particular division between Saudi Arabia and UAE is going to prevent UAE, the Gulf countries, from coming up with a unified response to the role of Israel in the region, to the role of the US in the region, to the future of US security guarantees to the region, and of course, on how to deal with Iran and how to deal with the crisis of the Strait of Hormuz. All of this were difficult to deal with even when the Gulf countries were united. Now, with the Gulf countries clearly divided along geopolitical and geoeconomic lines, it appears that they will not be able to. I don't think they will be able to present a unified front going forward. And we will wait and see how Saudi Arabia will respond to what UAE is doing. A few years ago, both Saudi Arabia and UAE were quite unified, and they did a lot of things which other members of GCC, like Qatar, did not like, and their adventures in Yemen in particular. But now you see that they seem to be divided. They are divided over Yemen. They are divided over what's happening in Sudan, where UAE is supporting RSF. So we will see that this growing rivalry between UAE and Saudi Arabia is going to become far more serious, perhaps creating extremely competitive and maybe even partially hostile groupings, with Saudi Arabia forming a new group in the region with Qatar, Egypt, Turkey, and Pakistan, and maybe with softer relations with Iran, and then UAE forming another nexus with Israel and the US and India, the I2U2 combination. So you might see some kind of geopolitical competition taking place as a result of this. We will see where Iran falls on this. It all depends on how Iran comes out at the end of this war. If Iran is more powerful and has more control on the Strait of Hormuz, then it's going to put a lot more tension and pressure on the Gulf countries. And so the internal divisions of the Gulf countries, I think, will just flare up. But if Iran comes out weaker, then I think the Gulf countries will be more united in their response to Iran. But at the moment, you could say that Iran, or the war with Iran, is more or less dividing the Gulf countries, when everything logically tells you that it should be uniting them. So anyway, I thought I will share this with you. I have a small announcement to make. I have been inviting scholars from all over the world to give their perspectives, very brief perspectives in 2 paragraphs about how the war, US-Israel war with Iran, is impacting the global economy, the global politics, and their own countries. So we have had so far people from Ghana, from Bangladesh, from Indonesia, from India, Turkey, etc., responding and sharing their thoughts, and also from Chile. So please go to this website that I'm basically editing this. I'm posting the link in the bottom. I just posted it. You can see that link. Please go there and look at these global perspectives. There are more coming. So there will be 2 or 3 new perspectives potentially every day for a while. So what is happening as the media is just covering, is just looking at what Iran is saying, what the US is doing, maybe Europe, and then most of the global South, which is being affected very seriously by this conflict. Their point of view, their perspective seems to be marginalized. And so, therefore, uh, uh, I am trying to bring that perspective forward. So please click the link and go visit it. And anyway, thank you very much for watching Conversations. Uh, Please, if you have not already subscribed to the channel, subscribe to the channel, like this video, press the bell icon, and don't forget to share this video with your socio-political network. Until next time, I'm your host, Muqtadar Khan. Take care.